Welcome back to the Deep Dive. Today we are tackling a real giant, a company that's into everything from refining and retail to connectivity and, well, even cutting-edge green energy. We're breaking down the Q2 FY26 consolidated results for Reliance Industries Ltd. That's for the quarter ending September 30, 2025. Our mission today to, quickly get a handle on the financial health and the strategic direction of this incredibly diverse company. But we're looking beyond just the raw numbers. We see sort of two titans here, the physical giant of energy and manufacturing and this digital leviathan with, over 500 million customers now. Which one is really driving the value? Okay, let's unpack this.
Well, the overall performance was frankly pretty spectacular. And what's fascinating here is how the growth engines clearly shifted. If you look at the consolidated headlines, we saw double-digit growth pretty much everywhere. The key number, consolidated EBITDA, that's earnings before interest, tax, depreciation, and amortization. It grew a really strong 14.6% compared to last year, came in over 50,000 crore.
Right, and just for context for listeners maybe outside India, a crore is 10 million rupees. So yeah, that's a staggering amount of money. Huge numbers.
Exactly. And the profit after tax, that also climbed 14.3% year on year. But the really crucial insight, I think, is where that growth came from.
Yeah.
It was almost entirely led by the consumer-facing, the domestic businesses. Reliance Retail Ventures Limited, their revenue grew 18% over last year. And Geo Platforms Limited, the digital side, that grew 15%. So this report, it's really a story about Indian consumption just powering massive corporate success.
Absolutely. So let's start right there, where the customer base is just enormous. The digital core, Geo Platforms, they hit a milestone this quarter that's, it's almost hard to wrap your head around.
It really is monumental. Geo officially crossed the 500 million subscriber mark. They ended the quarter with 506 million subscribers. I mean, that is just an enormous foundation for basically every other digital service they decide to launch.
And it's not just the sheer volume, right? The financials look better too. EBITDA grew, 17.7% year on year?
Yep, 17.7%. And they managed a pretty strong 140 basis point margin expansion as well.
No, 140 basis points. Okay, that's 1.4 percentage points. It might sound a bit technical, but for a huge infrastructure player like Geo, that kind of improvement in efficiency, that's significant, isn't it?
It really is. And, the quality of that subscriber base is also getting better. You mentioned ARPU earlier.
Yeah, the average revenue per user.
Exactly. It improved to about 211.4 per month.
That ARPU figure is always key, I find. It's definitely moving up 8.4% compared to last year, which is good. But, is that level really high enough yet to sustain the kind of massive capital spending they need for, say, rolling out and maintaining 5G across India? Or are we sort of still waiting for maybe a bigger price hike to really juice that number?
That's a really important question. Look, they are certainly generating cash, no doubt. But their strategy isn't just about raising prices, I think. It's also about monetizing the massive usage on the network. And the usage numbers are just insane. Per person, data consumption is now soaring at 38.7 gigabytes per month.
Wow, 38.7 gigs.
Yeah, think about that. That's enough data for the average user to stream, maybe 5 full seasons of a big TV show every single month. It's huge.
That incredible usage, it's kind of the perfect argument for their whole 5G rollout, isn't it?
Precisely. Look, they added 21 million 5G users just in this one quarter. That brings the total to 234 million. And maybe more importantly, 5G now accounts for roughly 50%, half of all the wireless data traffic on the Geo network. So it shows that network differentiation, it's translating directly into really intense user engagement.
And that focus on connectivity, it's not just mobile anymore, is it? Here's where it gets really interesting. They seem to be relentlessly pushing into fixed broadband and these home solutions, not just connecting houses, but kind of controlling the digital life inside them.
That's exactly right. They're connecting around 1 million new homes every single month. They've reached about 23 million total connected premises now. And a big part of that quick expansion is Geo Air Fiber, which uses, fixed wireless access technology. They've already got 9.5 million subscribers just on Air Fiber. That really shows some global leadership in that specific tech, FWA.
But the strategy feels like it goes beyond just the connection, the pipe itself. They're trying to turn the hardware, the box in your home, into a whole digital ecosystem with something they're calling GeoTeleOS. It sounds like they're trying to make a simple set-top box into like an integrated smart hub. What kind of features are they actually building into this?
They're essentially doing just that, turning every set-top box into a smart digital hub. It's got integrated stuff like home automation features, access to their cloud PC service, it's the GeoPC access, and, advanced things like parental controls. It's all kind of running on this underlying operating system.
Yeah.
And they even launched something called the GeoPC AI Assistant.
The GeoPC AI assistant. Okay.
Yeah. This assistant, it's designed to help users, generate content in real time, automate desktop stuff. And this is the integration point, right? They're using their foundational 5G network to deliver these cutting-edge software and AI tools directly into potentially hundreds of millions of homes.
Yeah.
That feels like a massive step toward their whole vision of AI everywhere for everyone.
Right. And speaking of consumption, let's pivot directly to the segment that's really powered by the Indian consumer, Reliance Retail. I mean, this segment just continues to be an absolute powerhouse. Massive revenue growth, again, up 18% compared to last year, hitting, 18 crore?
Yeah, just over 90,000 crore. And EBITDA growth strong too, 16.5%.
The scale is just huge.
It is staggering. They opened 412 new stores just in this quarter. That brings the total count close to 20,000 stores. I mean, that's retail dominance through sheer physical presence.
Yeah.
But maybe more critically, their registered customer base grew again, now up to 369 million people, and the number of transactions jumped over 26% compared to last year.
Wow. So it sounds like the consumer is definitely maybe helped by the festive season, particularly in certain areas.
They are. We saw really high growth across the key consumption areas. Yeah, helped by festive buying. Grocery business revenue grew 23%, fashion and lifestyle grew 22%, but the real explosion, the quickest growth, came from their quick hyperlocal commerce business. That's basically GeoMart.
Okay, tell us about that explosion, because 200% growth, that's not just about speed, right? It sounds like it's about changing how millions of Indians shop, moving away from just the local corner store.
That's exactly the insight, I think. Quick hyperlocal commerce saw over 200% growth year on year in average daily orders. And even quarter on quarter, it was up a strong 42%. They added 5.8 million new customers to GeoMart in the quarter alone. They're doing hyper-local delivery across 5,000 PIN codes now, and even extending 30-minute quick delivery to things like electronics and accessories in major cities. It's really aggressive.
So they're balancing that kind of mass market reach with, it seems, a pretty serious strategic focus on premiumization, too.
Absolutely. The results show this kind of dual strategy playing out. Massive reach on one hand, but definitely attracting higher-end spending on the other. In fashion, for example, they signed new exclusive deals for premium brands like Stella McCartney and Max & Co.
Right, and the data from Agio, their digital fashion platform, that seemed to back up that premium push as well.
Yeah, exactly. Agio had a really successful All-Stars Doucera event at its highest ever daily sales figures. And Agio Rush, that's their faster, sort of more curated premium service, showed much better metrics, like 16% higher average selling price, 17% better conversion rates compared to the main platform. Even the jewels business is showing that premium strength. Average bill value there was up a huge 52% compared to last year. So yeah, it's pretty clear the consumer business is pushing hard for higher value transactions across the board.
Okay, let's switch gears now. Let's turn to the foundational segments, what we call the energy engine, the part that provides that critical cash flow. We should start with oil to chemicals, O2C. This is really the legacy strength of the company, isn't it? And it delivered a pretty robust quarter, even with all the global volatility we're seeing.
Yeah, it showed real resilience and maybe some good timing too. O2C EBITDA grew sharply, 20.9% compared to last year, hitting just over 15,000 crore. But the main driver here financially wasn't so much volume, it was margin specifically. A big recovery in transportation fuel cracks.
Right, and for anyone unfamiliar, the crack spread or crack, that's basically the profit margin refiners make, right? The difference between buying crude oil and selling the refined products like gasoline and diesel.
Exactly. And that margin was really strong, up between 22% and 37% compared to last year.
Yeah.
And that recovery directly helped their domestic fuel retailing business, GOBP, which continues to be a massive success story.
Yeah, I saw those domestic volume numbers looked exceptional.
They really were. The retail network expanded again, up to 2,057 outlets now, and they delivered volume growth that was way ahead of the industry. High-speed diesel, HSD, volumes were up 34% year on year, and motor spirit, MS, or gasoline volumes were up 32%. They're just dramatically outpacing the overall market growth.
Okay, but even with that strong fuel recovery, the report did mention a bit of a drag in the chemical markets, didn't it?
That's the critical contrast, yeah. Even as the fuel business did really well because of global market conditions, they pointed out this persistent weakness in downstream chemical markets. Specifically, they mentioned the polyester chain deltas declined. And this just shows how the physical asset side of the business is still pretty vulnerable to those international commodity cycles and, global overcapacity issues. It's a sharp contrast to the sort of consistent domestic-driven growth we see in retail and geo.
Got it. Okay, let's quickly look at exploration and production E&P. That segment saw a bit of a decline.
A modest decline, yes. E&P EBITDA decreased 5.4% year-on-year. Now, this was mainly due to the sort of natural decline in production from the big KGD6 gas field. Production was down to about 26.1 MMS-CMD, and they also had slightly higher operating costs because of some planned periodic maintenance. That natural decline is another example of the kind of constraints you get with physical asset extraction.
Was there anything offsetting that drop in volume?
Well, the silver lining was the price they got for the gas from KGD6. That improved slightly to $9.97 per MMBTU, or a million British thermal units. So basically, they made a bit more money for each unit of gas they sold, even though the actual volume produced was naturally a bit lower.
Okay, let's look forward now. Let's check in on the big strategic long-term bets. This is where the company's putting serious capital toward the future. Starting with new energy, this is the portfolio with that huge ambition, right? To be the world's only end-to-end integrated green energy business.
Yeah, and the execution pace here seems very impressive. It's all about building physical capacity right now. In solar, they look firmly on track to set up that 20 gigawatt peak GWP of solar PV manufacturing capacity. They've already commissioned 4 PV module lines, and the first actual cell line is scheduled for commissioning next month in October 2025.
And the battery manufacturing site is also moving pretty quickly towards its massive goal.
Correct. They're making rapid progress on executing that 100 gigawatt-hour GWH battery gigafactory. Just to give a sense of scale, 100 GWH is just massive storage capacity, and the first 40 gigawatt H phase, they say, is on track for equipment installation. So it really shows they're committed to building that physical backbone for India's energy transition using their strength in, large-scale project execution.
Okay, let's quickly touch on the next generation of digital bets, then specifically media and that sort of overarching AI strategy.
Right. So Geostar, their media arm, actually delivered a record EBITDA this quarter. Came in at 1,738 crore, and that came with an industry-leading margin of 28.1%. They are just absolutely dominating digital consumption in India. The India-England Test Series, for instance, became the most watched Test Series ever on a digital platform, had 170 million viewers. And even after the IPL cricket tournament finished, their streaming platform, JioHotstar, kept a massive 400 million monthly active users. So that just confirms again how that digital base of 506 million customers is driving basically every other segment.
And finally, kind of tying the physical and digital worlds together is that pervasive AI strategy, what they call Reliance Intelligence.
Yeah, their vision, as we sort of touched on, is AI everywhere for everyone. And what's fascinating here is the physical integration piece. They're actually building GW-scale data centers in Jamnagar that's the same location as their huge energy complex. And the plan is for these data centers to be powered by the green energy they're building. So this AI push, which uses partnerships like the one with Meta for their Llama models, it isn't just software. It's actually being built on a physical, renewable foundation that they are manufacturing themselves. Pretty interesting integration. So look, if we connect this to the bigger picture, these Q2 FY26 results, they really show a company that's successfully managing global energy swings by balancing its legacy strengths, like that O2C resilience we talked about, with these massive high-growth engines that are really centered on Indian consumption, specifically retail and all the tech infrastructure via Geo.
And despite all this really aggressive spending on things like new energy and 5G, they seem to be keeping things fiscally disciplined too.
Oh, absolutely. Cash flow from those strong underlying businesses is clearly very high. And the balance sheet looks incredibly safe. Their net debt to LTM EBITDA ratio, that's net debt relative to their earnings over the last 12 months, it stands at a very comfortable 0.58x. Very manageable.
So what does this all mean, for the learner out there interested in the future of these kinds of huge conglomerates? Well, I think it confirms that the future of large-scale corporate growth, at least in this context, seems fundamentally tied to massive domestic digital consumption on one side and really aggressive investment in next-gen manufacturing, especially new energy on the other. It feels like the company that can successfully bridge those two worlds wins. But here's the final provocative thought for you to maybe mull over. The results detail all this progress on the massive, tangible, physical assets, right? The 20 geopi solar factory, the 100 GWh battery gigafactory. But could the real long-term disruption actually come from something completely intangible? What is the true long-term value multiplier for a company like Ariel? Is it the physical green energy factory they're building? Or is it the underlying software and operating platform at GeoTeleOS that powers every single new service that those 506 million customers see first on their 5G network? Something to think about.